Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been America's foremost precious metals brokerage firm since 1972, helping you build a strategic precious metals portfolio. Call 800-525-9556 to buy gold, silver, platinum, or palladium today, or go to McIlvaney.com.
Welcome back to Golden Rule Radio. Boy, we have a few things to talk about here with the gold price doing what it's done over the last month and even week. Man, it's definitely not boring, is it? Goodness.
Quite the action. Yeah, you're understating it, I think, Robert.
I think so too. One of the points we want to make, and we'll elaborate on it, but we've been talking about technicals with gold looking very positive for about a year now. And this last month and a half of the gold price moving higher, that was already preset in the charts for a nice rally in gold, which we've seen. And the extra news that's added to the extra push up with gold, that's just a little bit of an added bonus to it. But the move in gold was due anyway, and this is only the beginning. So we've had gold price moving right up to that previous all-time high. It did not violate it, but it pushed right into it. And we're seeing a nice pullback today, and we may see a little bit more of a pullback. But just want to make it clear that the gold chart had led us to believe that this was due for a rally, which we've seen, and the news has only just a little bit pushed it a little farther than maybe it was ready to go. So this is only the beginning of the next wave higher with gold.
I totally agree. And the old news is inflation, broken markets. You alluded to the other old news, the technical aspect of the precious metals markets and the way that those charts were forming and shaping up, and the way that we've been bullish on this program, and the great job that you guys have done the last few weeks in summarizing some of the breakout and why. The other old news is that Miles has always said on this program that it's the new news that changes the speed with which you ultimately obtain those technical support or resistance levels. It's kind of written in to put words in your mouth, Miles, or not. Hopefully I'm accurately representing you here. But nothing has changed, really, with the fundamentals, which is why we point them out in this show, and really the technical analysis of gold and silver and platinum that we've been doing for many months. What did change, obviously, was conflict and the speed with which we've achieved some of these prices. So the pullback, I think, is very healthy. What goes up must come down. When you far overshoot moving averages, you're going to come down and kind of get closer to them. So with that, Miles, why don't you take off and show us what the action has been that Robert's alluding to in the last week?
Yeah, Tori, I think take off is the right word. A little bit of logarithmic growth here in gold ever since breaking above that declining trend line we were looking at. So a lot of words. I guess it's because I've been saying it for years that I can do it in a few. But my tagline is news doesn't move markets. It simply speeds up or slows down the levels that you're going to achieve anyway. So as Robert was mentioning, as you brought up, Tori, it's no surprise to us that gold has retested the old all-time highs. I think the part that is a surprise to us, and maybe surprise isn't even the right word because we've all worked here a while. This has happened before. The surprise is just the speed at which it happens. But you look around the world, you look at what's going on with various commodity values. I mean, you've got substantial conflict in Eastern Europe. You've got substantial conflict in the Middle East. You've got potential substantial conflict in Asia, China, Taiwan, and you've got some potential at-home conflict taking place in Canada, as well as what we've been experiencing here in the United States with various political and activist groups throughout the COVID era. There is a lot of frustration and a lot of anger going around, and it's not surprising to see things like gasoline prices skyrocketing, to see things like precious metals prices increasing, to see things like raw materials like nickel and copper going up to significant levels, because this is the world we live in today, and this world comes back around from time to time. I mean, markets are cyclical, life is cyclical, and eventually you come back to these hard times. And I think we'd all be in agreement that hard times are hard times, but hard times make strong people.
They add to your wisdom, too. These are all learning opportunities.
Yeah, it's just unfortunate that it costs human life to learn.
No, it's a good point. And what gold to me often is doing too is it's reporting the news in a different way. It's telling a story all the time. It's telling the monetary story, the political story, geopolitical story, economic story, and it's screaming out when there's uncertainty in any of those one categories. Well, right now, it's like the canary in the coal mine. It's telling you that there's uncertainty in all of those markets, in all of those spheres. And at least it's proclaiming that central bankers are losing control of the financial markets. That's what we've been talking about here on this show for many months. And unfortunately, more ominously, a global economic war has commenced. And who knows where the gold price goes from here? Because who knows where peace finally settles in and where conflict ends up not only worsening but expanding globally.
Yeah, well, certainly over the past week, I mean, gold has gone a direction, at least until today. And I think Robert alluded to this a minute ago. I think that we are going to see gold take a little bit of a pullback here. You tend to give up growth that's caused by emotion, and this clearly was an emotional reaction over the last few days as the price of gold went up. Now, where I do think this matters. Now, granted, I don't care if it's emotion or technicals or reason or logic or anything else that pushes a price. What I do care about is what prices has it blown through? What standing sell orders? What standing profit or stop losses? What standing levels and standing orders has gold taken out over this price? And you're looking at pretty much everything between 1850 and the old highs of 2080 has now been touched. So is it reasonable you're going to see some profit taking here over the next couple days or weeks? Sure. Why not? We could have a nice pullback back down to the old descending ceiling. We don't have to. We could slowly meander our way back above 2080 and all of a sudden start breaking into new territory. There's no reason that can't happen. But it's also possible how we see gold react over the next couple days, that for the $250 we went up, we could lose 150 of it. But the thing we know for sure now is you can argue we have started the next bull market leg in the precious metals market. And anytime you get a pullback, you want to look at that as an opportunity to add to your position if you have the cash available to, or do the really smart thing and just buy a little bit every paycheck like I do. Because what we're looking at here, while these numbers may seem big today, you know what seemed really big 10 years ago? The difference between 650 and 700 when the last bull market was starting to kick off. That looked like a whole lot of price movement, $50 up and down, but little did we realize it was going to 2,000. Well, this next price move is starting at 2,000. So where does it go from here? And what are those numbers going to look like? And I don't want our clients looking back going, all these little opportunities, we were worrying about $20 moves up and down, and now gold is how many zeros behind it? And that's what I don't want to end up missing out on, either for myself or my clients.
Yeah, George, one of our advisors, said yesterday in our meeting, as you guys recall, that the best day to buy gold has been every day so far that you've been alive. It's something that you just buy consistently, regularly, over time, because of the fact that we've seen $35 gold in this company's history, and we've seen now $2,080 gold in this company's history. And that's because of economic and monetary policy that is unchanged. So silver has also followed suit. It's had a little bit of activity. Has it broken out, in your opinion, technically into a more bullish pattern for you?
No. Silver has not. I mean, silver has obviously overcome some previous highs, has obviously moved above the 200-day moving average, showing some bullish tendencies. But we've had this movement before, in fact, more than this. You know, if you go back to the original high in silver back in July of 2020, we came from $30 plus all the way down to sub 22. And then we went all the way back up there again, and then came all the way back down again. We went back up to $30, even put in a slightly higher high by a few pennies. And then by September, October of last year, we had come all the way back down to 22. So silver is right in the dead center of its trading range, but it's been a bigger percentage range. Silver being the more volatile metal, the cheaper metal, the less valuable metal. Those prices tend to move a lot faster. And I've said this for a long time, gold moves first, silver plays catch up. Silver becomes the metal that people get interested in when they say, wait a minute, gold is how much money? That's too much money, let's buy silver. And last time I checked, silver did what? A threefold increase in about 6-7 months at the tail end of the last 2008 to 2010 market crash. So we could end up seeing something like that again in silver. So silver could be playing catch up later stages of this bull market, similar to platinum.
Well, speaking of platinum, we've been liking the idea of buying platinum, and we've said that here on the show for a while. Platinum may be just kind of the sleeper metal that eventually wakes up and outperforms some of the other metals. Palladium's obviously shown that it has the potential to go high, and platinum, I think, also does. Platinum has gone up and had this sell-off just like the gold and silver price. And one thing to note is that it actually has, bettered the previous high, but still has a little bit farther to go to clear a few other previous highs. So it needs to get some legs here, 1200, 1250, 1300. But I like the idea of buying platinum, especially with this move in gold and silver. Clearly bullish. I think momentum's clearly shifted with gold and silver. So they're headed higher. And with platinum being a sleeper metal, I think it's bound to follow gold and silver higher. It may be lagging a little bit, but we do like platinum, especially because it's like 45% below the price of gold. So ratios matter when you're trading metals. And if you like the idea of buying gold at $1,200, then you might add a little bit of platinum. If you don't already have a little bit of platinum, it's a good idea to pick up a few ounces here.
Well, keep in mind, too, that at least half of the world production of platinum and palladium is right out of Russia. And they made a declaration today that they're freezing all exports of commodities. So that could absolutely have an impact on the price of palladium and platinum. It doesn't have to be a healthy, normal, predictable, or even reactive market to economics in order to drive those industrial metals. It could be in response to supply and demand. If the supply stays pinched as a result of a lack of exports out of that producing country, then certainly with a steady demand, you would see a steady increase in price.
So moving over to some of the other markets, certainly the currency markets, it's not unreasonable to see what we are in some of the currencies, with the euro showing some weakness, as if there's weakness in the European region right now.
Understandable weakness, you're saying.
Understandable weakness. And I think some flight capital going into the U.S. dollar. Rob and I talked about this a couple weeks ago when he was in here. I do expect to see, despite technical reasons showing continued decline in the dollar, long term, it would not surprise me to see the dollar continue to climb a little bit. And it has done that up until today. The dollar index was up until taking a little bit of a turnaround today. But so did some of the other flight capital assets like gold, silver, platinum, who are all back down a little bit today. So keep an eye on the U.S. dollar. I think this may be a great excuse with strengthening dollar for us to now come into March. Remember that thing we were talking about with the dollar in March? About a month or so ago, Jay Powell.
Are you talking about the interest rates increase?
Yeah, it rhymes with
you're looking at me like
Schmates.
Is that a roller coaster or what? Because they've been talking about a 25 bip hike in May, then it moved to a 25 bip hike in March, then it moved to a guaranteed 50 basis point hike in March, and now it's back down to the foregone conclusion of a 25 basis point hike in March.
Well, it is March, right?
And it is, and it's coming. And so, we've got this opportunity to see that do absolutely nothing to the markets. We said about 6 weeks ago that if this Russian conflict increased, that you would see, with an invasion into Ukraine, you'd see gold pop $50 in a day. We saw that. You're not going to get nearly that type of volatility in the market when you get this actual basis point hike, because a lot of that's already been priced in, and now it's becoming negligible because we're on the verge of an inflationary recession. I would argue that we're already in it, and that this is a very convenient distraction for the reality. And I'm not trying to minimize the fact that there's conflict. I'm just saying it's a distraction from the reality, which is kind of how Robert started the show with old news versus new news. The other issue is that economic recession, hear me again, is inflationary. And Don McElvaney has said for years, the next Great Depression is going to be an inflationary one. Well, we've got the inflation taken care of. The economic rollover now, I think, is also being taken care of. And the Fed, in this situation, has to choose between saving the dollar, as you're alluding to, and debt defaults. So what is it going to be? Are they going to choose the dollar, or are they going to choose their debt? And at first, they're going to try to do both initially. But eventually, the Fed's going to have to save the dollar. Because if the dollar fails, then the Fed and the U.S. government goes with it. So get ready for debt defaults, and all under the convenient guise of either conflict or coming to the rescue.
And finally, those equity markets. The equity markets all put in pretty significant lows back in February. We've had not new lows, but a continued bounce down here over the last week. But most of the equities, your Dow, your S&P, your NASDAQ, your Dow Transports, none of which have yet put in a new lower low. But it's not surprising that hasn't happened quite yet. So all the markets to me look like they're just a ball bouncing down a hill. Now, that doesn't mean they can't turn around and continue to climb back up. But in lieu of what you're talking about with interest rate expectations, I would be hard-pressed to see those equity markets take significant rebounds back up to previous levels. Who knows? Maybe the industrials get up to 35,000. That'd be a reasonable bounce, not out of the ordinary. But are we going to continue to new higher highs?
I don't think so.
40,000?
Not with the Fed tapering. Not with their decision to stop being direct investors in the market. And you've got that piece, you've got the interest rate hikes, and then you've got the Fed balance sheet reduction that ultimately has to happen at some point. And so those are the reasons I don't think that we will see them. Interest rates will work against that, Miles. The tapering works against that. And eventually the Fed balance sheet reduction works against that. So I think we've seen the highs, and I personally am witnessing so much portfolio assets moving out of equities into precious metals and other real assets because it's a real phenomenon. And at this point, it's a foregone conclusion.
Well, watch me go full paranoid here. Watch something happen like in a very short period of time, around the exact same time you have interest rate rises, because most people are assuming that a 25 to 50 basis point hike is coming, that at the time that happens, assuming that's already priced into the market, you might have some sort of plunge protection team action stepping in here and kicking the market up a little bit for the optics of showing the American public that interest rate rises are good, which they technically are. You can't keep interest rates at zero forever. Japan has tried that and it doesn't really work. So maybe we see something like that happen where you have a little bump up in the equities market for a short period of time. But ultimately, I think the momentum gone, the interest of the American public is gone, the availability of capital is gone, and I don't know where the money comes from if it's not coming out of the Federal Reserve.
All roads lead to gold in this type of a situation, and I know that sounds cliche, but it's true. You cannot find the stability and the predictability and the historical reaction anywhere else like you can in gold. And so without further ado, we're going to wrap it up this week, and we appreciate you coming back and listening to Golden Rule Radio.
If you liked what you heard, hit the subscribe button, ring the bell. Head on over to our website, McIlvaney.com, if you have any further questions. You can also find us on Facebook at McIlvaney Financial, Twitter at ICA Gold. Or if you'd like to discuss your personal portfolio with one of the advisors here at McIlvaney ICA, give us a call at 800-525-9556. Thanks for listening and have a great week.